Ever heard of a dark pool? If you've ever wondered why prices don't react to massive demand in crypto, especially with coins like XRP, let me show you how dark pools are being used to suppress it and why it won't last much longer. 1. Unlike retail investors like us, big players, institutions, hedge funds, even governments don't buy crypto on public exchanges. They operate through OTC over-the-counter desks, or dark pools, where trades are executed privately and off the books at least initially. 2. Imagine BlackRock wants to buy 1B XRP. If they place that order directly on Binance, the price would instantly spike. They'd eat through the order book, buying at increasingly higher prices. They don't want that. They want stealth and efficiency. 3. Enter the dark pool. It's a private market, often hosted by a centralized exchange like Binance or Coinbase, where large buy-sell orders are matched without impacting the public price. Nobody sees the transaction until it's already done. 4. So instead of triggering a buying frenzy or FOMO, BlackRock gets their XRP at an average price, while the rest of us stay in the dark, literally. This also means prices stay artificially low, even during periods of massive accumulation. 5. Sounds shady. It kind of is. It's legal, but it manipulates the visible market. Price action is no longer a pure reflection of supply and demand, at least not in real time. This is why XRP, despite its tech, partnerships, and use cases, isn't already over to figures. 6. Let's connect the dots. Institutions accumulate XRP and BTC privately. Supply on public exchanges keeps shrinking, demand builds in silence. Once dark pools dry up, there's no choice but to buy on market. Boom, prices spike, you won't see it coming. 7. We've seen this happening already. Exchange balances of BTC and XRP are near all-time lows. Why? Because whales and institutions have been quietly draining liquidity off the exchanges. Less supply plus delayed demand equals explosive setups. 8. You'll often see large transfers show up on Whale Alert. 2,859 BTC moved from unknown wallet to unknown wallet. That's not random. It's most likely the result of a completed dark pool transaction being settled after the fact. 9. The catch. By the time these moves hit public data, it's already too late to react. Institutions bought cheap, you'll end up buying higher, if you're lucky enough to notice the trend before the price runs. 10. So how do you play this? Stop expecting the market to be fair. It's not. But if you understand how liquidity moves, how exchange balances drop, and how whales operate in silence, you can position yourself ahead of time. 11. If XRP has a future and the fundamentals say it does, then this suppressed price action is not a bug. It's a feature of how institutional accumulation works. Once the dark pools are dry, the market has no choice but to chase. 12. The lesson: prices are manipulated. Big players move silently, exchange flows tell the real story. When supply dries up, the charts react. So don't just watch price, watch liquidity. What is the lesson here? Prices are manipulated. Big players move silently, the flow of exchange reveals the truth. When supply dries up, the chart will react. So don't just watch the price, follow the liquidity. Is that useful? To me, crypto analysis feels meaningless. We're not whales, but we're definitely not bait either.